Something major just shifted inside the Social Security Administration, and millions of Americans who depend on SSA, SSI, and SSDI payments are either going to benefit from this or get left behind because nobody told them the truth. Here's what's actually happening. The SSA has confirmed adjustments tied to the cost of living formula, and for qualifying recipients, that means up to $1,200 more landing in your pocket, but only if you meet the right criteria, file at the right time, and avoid the 3 most common mistakes that cause seniors to miss payments entirely. Right now, over 70 million Americans rely on Social Security benefits to cover rent, groceries, and medical costs. Yet the SSA itself admits that billions of dollars in entitled benefits go unclaimed every single year, simply because people don't know what they qualify for. This video breaks down exactly who qualifies, when payments hit, what the SSA is not publicly advertising, and the one step you need to take before this month ends. Don't scroll past this. Your money is waiting. Let's start from the very beginning, because a lot of people are hearing about this $1,200 boost and immediately assuming it applies to everyone automatically. That is not how Social Security works, and that misunderstanding alone causes thousands of seniors to either miss out completely or worse, make decisions based on wrong information they found online. So let's slow this down and walk through everything clearly, because you deserve the full picture, not a rushed headline. First, you need to understand what is actually driving this boost. The Social Security Administration calculates something called the cost of living adjustment, which most people know as COLA. This adjustment exists because the cost of everyday life, groceries, utilities, prescription medications, housing, does not stay the same from year to year. Prices go up, and the government, through the SSA, is legally required to track those price increases using a specific inflation index called the CPIW, which stands for the Consumer Price Index for urban wage earners and clerical workers. When that index shows that prices have risen significantly, the SSA is obligated to increase benefit amounts to help recipients keep pace with the real-world cost of living. That is the foundation of what we are talking about today. Now, here is where it gets very specific and very important. The $200 figure that is being discussed is not a flat check that every single Social Security recipient will receive in one lump sum. What it represents is the cumulative annual increase that certain beneficiaries will see added to their monthly payments when you calculate the boost over a 12-month period. So if your monthly benefit goes up by around $100 per month, that adds up to approximately $1,200 over the course of a full year. For people living on fixed incomes, that is not a small number. That is a real and meaningful difference in their daily quality of life. And for higher benefit recipients, the monthly increase could actually exceed that, meaning the annual total climbs even further. But who exactly qualifies for the higher end of this adjustment? That is the question most people are not getting a straight answer to. And that is exactly what we are going to cover right now. The amount of your COLA increase is directly tied to your current benefit amount. The SSA applies the COLA percentage equally across the board, but because it is a percentage applied to your individual benefit, people who receive higher monthly payments naturally see larger dollar increases. So if you have been receiving Social Security retirement benefits for many years, if you worked for a long time and contributed heavily into the system, or if your SSDI benefit was calculated based on a strong earnings record, your monthly increase will be larger than someone who receives a smaller base benefit. For SSI recipients specifically, which stands for Supplemental Security Income, the rules are slightly different, and it is critical that you understand the distinction. SSI is a needs-based program. It is not the same as regular Social Security retirement benefits or SSDI, which is Social Security Disability Insurance. SSI is designed for people who have very limited income and resources. Elderly individuals, blind individuals, and people with disabilities who did not accumulate enough work credits to qualify for traditional Social Security. The maximum federal SSI payment for an individual is adjusted annually as well, and the COLA increase applies to that maximum rate too. This means if you are currently receiving SSI, your monthly benefit amount should have also gone up, and if you have not noticed that increase reflected in your payments, that is something you need to investigate immediately by contacting the SSA directly. Now let's talk about SSDI, because there is a significant population of Americans under the age of 65 who depend on Social Security disability insurance, and they are just as affected by these changes as retirees. SSDI is funded through the same payroll taxes that fund regular retirement benefits. If you became disabled before reaching full retirement age and you had enough work credits, you were moved on to SSDI. The COLA increase applies to SSDI payments in exactly the same way it applies to retirement benefits. Your monthly payment goes up by the same percentage. And when that percentage translates into real dollars, depending on your benefit level, you could absolutely be looking at increases that add up to $100 and $200 or more per year. Here is something that the SSA does not exactly go out of its way to advertise loudly. There are what are called auxiliary benefits. Payments that go not just to the primary Social Security recipient, but also to their family members in certain situations. If you are receiving Social Security retirement or SSDI benefits, your spouse may qualify for a spousal benefit. Your dependent children under certain age conditions may also qualify. And those auxiliary benefits also receive the COLA increase. So in a household where multiple family members are receiving Social Security payments, the total annual increase across the entire household could be substantially higher than $1,200. This is money that belongs to American families, and too many people are leaving it on the table simply because they never knew those auxiliary benefits existed or that they too were being adjusted upward. Let's also address something that confuses a lot of people, which is the relationship between Medicare and Social Security. Many Social Security recipients have their Medicare Part B premiums deducted directly from their monthly Social Security payment. This is called the hold harmless provision, and it was put in place to protect beneficiaries from seeing their Social Security payment actually decrease due to Medicare premium increases. However, when Medicare premiums go up significantly, it can eat into your COLA increase in a way that feels like you are not seeing the full benefit of the adjustment. This is a real and frustrating reality for many seniors. Your gross Social Security payment may go up because of COLA, but your net payment, the amount that actually hits your bank account or arrives on your Direct Express card, could be smaller than you expected because Medicare Part B costs also went up. Understanding this distinction is critical so you are not blindsided when you check your payment amount. Now, there is another group of people who absolutely need to be paying attention right now, and those are individuals who are approaching the age of eligibility for Social Security benefits, but have not yet filed. If you are 62 or older and you have not yet claimed your Social Security retirement benefits, the decisions you make right now are going to affect you for the rest of your life. Every year that you delay claiming Social Security past your full retirement age, which depending on your birth year is somewhere between 66 and 67, your benefit amount increases by approximately 8% per year up until age 70. That means if you can afford to wait, you are locking in a permanently higher base benefit, and then every COLA increase going forward is applied to that larger number. The long-term financial difference between claiming at 62 versus waiting until 70 can be tens of thousands of dollars over the course of a retirement. This is not a decision to rush, and it is not a one-size-fits-all answer, but it is a decision that you need to be making with complete information. There is also a critical issue around Social Security overpayments that has been making waves recently. And if you or someone you know has received a letter from the SSA saying that you were overpaid and now owe money back, please listen to this very carefully. The SSA has been sending out overpayment notices to beneficiaries, in some cases demanding repayment of thousands of dollars, sometimes going back years. The SSA has the legal authority to recover overpayments, but they also have a process for waiving overpayments in cases where the recipient was not at fault and where repayment would cause financial hardship. If you received one of these notices, do not ignore it, but also do not panic and assume you simply owe the money with no options. You have the right to appeal, you have the right to request a waiver, and you have the right to ask for a repayment plan that does not destroy your monthly budget. The key is to respond within the time frame stated in the letter, because missing that window can eliminate your ability to fight back. Let's talk about the payment schedule, because this is something that trips people up every single month. Social Security payments do not all arrive on the same day. The date you receive your payment depends on your date of birth and in some cases, when you first became eligible for benefits. If your birthday falls between the 1st and the 10th of any month, your Social Security payment arrives on the second Wednesday of the month. If your birthday falls between the 11th and the 20th, your payment arrives on the third Wednesday. And if your birthday falls between the 21st and the 31st, your payment arrives on the fourth Wednesday of the month. SSI payments, however, follow a different schedule entirely. They are generally paid on the first of each month. Knowing your specific payment date matters because it helps you plan your budget. And it also helps you recognize immediately if a payment is late so you can take action right away rather than waiting and wondering. Something else that is extremely important right now involves Social Security and taxes. Many seniors are genuinely surprised to learn that Social Security benefits can be subject to federal income tax depending on your total income. If you are a single filer and your combined income, which includes your adjusted gross income, any non-taxable interest, and half of your Social Security benefits exceeds $25,000 per year, then up to 50% of your Social Security benefits may be taxable. If that combined income figure exceeds $34,000, then up to 85% of your benefits could be subject to federal tax. For married couples filing jointly, those thresholds are $32,000 and $44,000 respectively. This is something that catches a lot of retirees completely off guard during tax season, and it is especially relevant right now because the COLA increase means your benefit amount is higher, which means for some people, it could push their combined income over one of those thresholds for the first time. Now let's get into something that does not get nearly enough attention, which is the importance of keeping your information updated with the Social Security Administration. If you have moved recently, if your banking information has changed, if your marital status has changed, if a family member who is receiving auxiliary benefits under your record has had a change in their circumstances, all of these things need to be reported to the SSA promptly. Failure to report changes can result in overpayments, which then have to be paid back, and in some cases can even result in interruptions to your benefit payments. The easiest way to manage your information with the SSA today is through the My Social Security online portal at ssa.gov. If you have not set up your online account yet, it is genuinely worth doing. You can check your payment history, review your earnings record, update your direct deposit information, and even get an estimate of your future benefit amounts all in one place. Speaking of the online portal, let us address something that many seniors feel but do not always say out loud. Navigating government websites can be incredibly frustrating, and the fear of making a mistake or accidentally triggering some kind of problem with your benefits makes a lot of people just avoid the whole thing entirely. That is completely understandable, but avoiding it is actually the riskier choice. The SSA processes millions of cases, and if your information is outdated or if there are errors on your earnings record, nobody is going to proactively reach out to fix it for you. You have to be your own advocate. If you are not comfortable using the online portal, you can call the SSA directly at 1-800-772-1213. You can also visit your local Social Security office in person. Waiting times can be long, so it helps to call ahead and make an appointment rather than just walking in. There is one more thing that needs to be said plainly because it directly affects the financial security of too many Americans right now. Scammers are actively targeting Social Security recipients. They know that seniors are paying close attention to benefit changes, and they use that attention as a weapon. If you receive a phone call from someone claiming to be from the Social Security Administration, and they are telling you that your benefits have been suspended, that you owe money, or that you need to verify your information immediately or face consequences, hang up the phone. The real Social Security Administration does not call you out of the blue and demand immediate action or payment. They do not ask for your Social Security number over the phone when they called you. They do not ask you to pay fines using gift cards or wire transfers. These are scams, full stop, and they are stealing real money from real people every single day across this country. The reason this $100 boost conversation matters so much right now goes beyond the dollar amount itself. It is about whether the millions of Americans who built this country, who paid into this system for decades, are actually receiving everything they earned and everything they are legally entitled to. The system is complicated by design, and that complexity works against ordinary people. But knowledge is a genuine equalizer. When you understand how COLA works, how your specific benefit is calculated, what auxiliary benefits exist, how Medicare interacts with your payments, what your rights are around overpayment notices, and how to protect yourself from scammers, you are in a fundamentally stronger position. Your next step after watching this video should be to log into your My Social Security account, review your current benefit statement, and make sure every piece of information on file is accurate and current, because everything starts there.